In today's video, I want to touch on two beaten down stocks and maybe even a forgotten one as well. One is actually more beaten down than the other. Now, the first company I want to touch on is Evolution Gaming. It's a company in Europe, more specifically in Sweden. We did touch on this company a little bit during the European stock video. If you missed that, that will be in the top right corner. And the second company I want to touch on is ENPHase. So now you know, hopefully you keep watching. Now, I know it's quite, let's say, controversial to talk about Evolution Gaming for those of you that don't like these types of companies, right? Sin types of companies, gaming, gambling, and all of that. But for those of you that do want to hear more about that, maybe this is the video. So right now, if we look at Evolution AB, we can see that this stock has not seen all-time highs in over 1,000 days. Last time it was at all-time highs was here May of 2021. Now, this company, although it was cheap before, just became cheaper and cheaper and cheaper. Some headwinds, some hacking, some protests, and now an issue coming out of the UK. So we're going to touch on all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So right now, this company has a market cap of around $15.6 billion. This is in Swedish kronen. The forward PE sits at 11.9 times. Yeah, it might be low. That's true, especially if you look at the expected growth rate for this company, top and bottom lines. It's still expected to grow quite quickly. Now, one of the reasons why the stock has also taken a hit is because, well, revenue in the US, in North America, is a little bit slower than expected. Right now, if we look at the average analyst price target, that sits 62.4% higher than the price we're at today. Looking at some pricing metrics comparing to the 5-year mean, it is much cheaper than the 5-year mean. Forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth sits at 0.72. So yes, it's true that it's been under the 5-year mean for a while now, right? If we look at forward PE, EV to EBITDA, price to sales, price to free cash flow, it's been under the 5-year mean for a while, and yet the stock keeps going down. That's true. That's why people say don't try and catch falling knives, because it might have been cheap a couple of months ago. Guess what? It just became cheaper. Now, more recently, we've had this come out. So the UK Gambling Commission is reviewing its license. So Evolution has been informed by the UK Gambling Commission that it has commenced a review of Evolution Malta Holding Limited's operation license under Section 116 of the Gambling Act 2005. The review can have a range of outcomes which include no action being required, conditions being imposed on the license, financial sanctions, suspension and revocation of the license to operate. Evolution is cooperating fully with the Commission and has taken requested immediate action to remedy the situation. Games on the identified websites not holding a Commission license have been made unavailable from the UK. Evolution continues to actively work with the Commission to resolve this matter. Now, what's important here is that only 3% of Evolution's revenue comes from the UK, and yet the stock went down around 10% or so. Evolution CEO said the following: Evolution embraces the objectives of the review by the Commission. We are committed to support the licensed UK market as well as preventing unlicensed traffic. We are now taking forceful action using all technical tools available to us to ensure that our games are only available in the UK through Commission licensed operators. We believe that a close collaboration to address our joint concern will lead to swifter and better results. As always, we remain committed to an open and transparent relationship with our regulators. If you're asking me what the outcome will be, I think they will just pay a fine. Now, switching to the overall business here. So this is the expected growth rate for free cash flow, the blue bars right here. In fiscal 24, it's expected to take a hit, down 3.9%, but then we see a reacceleration, or that's the expected reacceleration in free cash flow in fiscal 25 and 2026 by 15.9% and 18.7%. Now, where do they generate the most revenue? As you can see right here, the majority of their revenue comes from Asia. Then we've got the green one, which is North America, and then Latin America. Unfortunately, we did not get here the rest of Europe, Great Britain, and Nordics metrics since March of 2023. But as they said, the UK is only 3% of revenue right now. How do they generate revenue? Well, the majority comes from live revenue, so those live games, and then a small part here comes from random number generators, and that has been a disappointment, right? As you can see, they acquired a couple of studios, a couple of companies, and well, revenue there has not increased as expected. That should be changing. That, at least that's what they are telling us, that should be changing. So that might have been a headwind that will turn into a tailwind in 2025. That remains to be seen. But overall, if we zoom out, we look at free cash flow, total revenue, and earnings per share over the last couple of years, this business has exploded. It has continued to grow super fast and in a profitable way. Of course, if you look at the stock, the growth is definitely not reflected here, right? Like I said, they reached all-time highs back here mid-2021. Since then, it's been going down, down, down. The interesting part here is that right now, although RSI is just not oversold, we are back at prices not seen since September of 2022, and that was when the stock did rebound. Could we see the stock rebound around the same prices right now? Remains to be seen. RSI is definitely lower today than it was before. So that's Evolution AB. I think there is definitely some value to be found here. Yeah, maybe it's been a value trap for quite a while, but I don't see this company disappearing anytime soon. So yeah, maybe all the headwinds will suddenly turn into tailwinds in 2025 and onwards. What do you think? Let me know down in the comment section below. Moving on to company number 2, and that's Enphase. Now, of course, with Enphase, we know they had huge growth, right? Before interest rates went up. Then interest rates went up, growth completely disappeared. Now, of course, there are some fears that Donald Trump might completely destroy these types of companies, but in my opinion, I don't see that happening anytime soon, because one, I do think that he wants the United States to stay on top or become the number one player when it comes to energy and maybe even solar. Solar has been talked about by Elon Musk, for example, by Sundar Pichai, and by many other leaders, and I think he will listen to those leaders. Plus, Enphase, an American company, I think they'll continue to see success. But let's talk a little bit more about that. So right now, Enphase stock is down 44.5% year to date, has a market cap of under $10 billion and a forward P of 21.4 times. As you can see, in the last 5 years, this stock is still up 173.3%. If we look at the analyst expectations, of course, fiscal 24, a disaster of a year, revenue down 42%, EPS down 50%. Then in fiscal 25 and 2026, that's of course expected to flip, with revenue and EPS expected to grow 31.8% in fiscal 25 and another 18.24% in fiscal 2026, with EPS growing 75.4% in fiscal 25, then another close to 25% in fiscal 2026. Of course, this number will definitely change in 2025, seeing how the overall economy is doing in the United States and definitely in Europe. If we look at the average analyst price target right now, that sits 30.4% higher than the price we're at today. Switching to some pricing metrics here, the same story. Forward PE, EV to EBITDA, price to sales, price to free cash flow, and then price earnings to growth at 0.87. All the other pricing metrics here are, of course, under the 5-year mean. But of course, previously, this stock did get a higher multiple because it was growing quicker than it is right now. And so switching to the business, here you can basically see this visually, right? Huge growth in 2022 and 2023. Free cash flow went up as well, although in 2023, free cash flow already got hit. And now in fiscal 2024, free cash flow is expected to be down 29.3%. But then we see it grow 27.6% in fiscal 25 and then another 19.1% in fiscal 2026, with of course revenue continue to grow, expected to be above $2 billion by fiscal 2026. Where do they generate their revenue? Well, the majority comes from US revenue, and then we've got a smaller chunk here from international, mostly from Europe. And of course, Europe has taken a huge hit. If we look at the amount of microinverters that this company has shipped, well, since 2018 all the way to 2023, of course, the growth has been spectacular. But then in 2023 to right now, in the last 12 months, it's down 60%. Now, with regards to Europe specifically, they said the following. They reported a 15% decline in revenue from the European market in Q3 compared to Q2 2024. The overall sell-through of their product in Europe was down 34% in Q3 compared to Q2. This decline is attributed to a challenging business environment with decreased power prices from early 2023 highs, slow economic growth, and limited consumer confidence. The European market presents various challenges, including economic conditions and consumer sentiment. Despite these challenges, Enphase is actively working to strengthen its market position. They're pretty strong in France. Future outlook here is that, well, they believe they're well positioned for growth in Europe once the solar market stabilizes, thanks to their broadened geographic reach and diverse portfolio. And here I have a tweet and a reply by Elon Musk and Sundar Pichai talking about solar. Sundar here is saying, we should scale solar so much more. Amazing that we keep looking at alternatives when the most obvious path is staring at our eyes, literally. So yeah, I don't think that companies like Enphase, First Solar, for example, are going to go anywhere just because Donald Trump is going to be president. I think these companies will actually be doing much better in the next 4 years. And so right now, looking at the stock, we can see that right here, $60 has been a solid rebound area, which has previously been a resistance, so a resistance that did turn into support. The stock was also a little bit oversold back then. Now, right now, we're sitting at around the 20-day moving average. The 50-day moving average sits at $77.92, and the 200-day one sits at around $100. So yeah, right now, it does seem like this company did get some positive momentum in the last month or so. Of course, the big move will happen after the next earnings report and earnings call, maybe some guidance for 2025, a sentiment check. I think that's when we're going to see quite a big move. So with Enphase, you can either wait, you can maybe play the options game, buy some leaps for 2026, maybe even 2027, and see how things evolve. But overall, those are the two companies I want to touch on in this video. Let me know your thoughts about both of them down in the comment section below. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.